Welcome back, boys. What a day. What a day. I'm telling you, the Dirty Dow has not failed us. It's not failing us. Um, Now, this is the second best thing to happen today. A friend of mine just got back from his service in the Navy, just got off the boat, and he is now $500,000 richer from investing in Doge a few years ago. he, he opened up the internet and found out that he's now worth 500,000. So, congrats to him for cashing out of Doge for whatever reason, buying all those coins a while ago. But today, the best thing for all of us is that the Dow took off a percent here through all-time high again. Now, if any of you were not here in the morning, I basically had an epiphany in front of us. What we see, what's happening with how portfolios are adjusting and changing to the most recent climate, going from 60-40 portfolios, 60% stocks, 40% bonds, and instead switching, removing that 40% bond number and instead putting that into equities through this function that growth and value are direct hedges of one another. They're correlated with each other. And when one is positive, the other can be positive, but when one is negative, the other is usually positive. And that's what you want with a hedge, is this correlation. There's no correlation between equities and bonds right now, right? There's this fundamental problem there with how inflation is coming. You can't buy bonds if there's going to be inflation because you're getting locked into a rate that is not going to be the rate in 2 years from now if there's inflation, which we know there is. There's going to be government spending that's going to keep appreciating the equity market every time there's more spending, right? What is the one spot that gives you exposure to growth and exposure to value? And with the most sort of important thing here, which is that if you want this consistent earning, like a bond, dividends are where you go in the equity market. Dividends allow you to go put $1 billion into the equity market and get a consistent return. It's the only thing that's actually consistent. But if you think the market here is going to be continuing to depreciate with inflation, then you can go into an area that gives you exposure to growth, value, dividends. That'll give you everything that your 60-40 portfolio is supposed to, but is not. And the one place in the equity market that you can do that is called the Dow Jones Industrial Average. In the Dow Jones Industrial Average, you get tech, industrials, there's growth, value, all dividends. It gives you fucking everything. And that's what's been happening. I've been talking about this value play and everything else for a long time, and how we're trading it, and that's one thing. But really what's happening here are all of these funds, portfolios, everything in the world has basically been changing the strategy, and now it's becoming more and more apparent. And especially today, it just kind of, everything we're seeing and the way we're seeing this short-term volatile areas, sort of, the pricing is very chaotic and there's no trading. A lot of it we can see is this rotation into this different idea, and how we look at the bond market and all the volatility there. And why is the Fed, switching things up? All of this basically, when it comes down to it, and again, I'm not going to repeat from this morning anymore, is that the strategy has changed into this full equity perspective, which, again, by using this, you are getting everything that you want while still being hedged in a way, right? And it's really the best case scenario here. And again, the reason why this is going up is because there's an inflow. There's an inflow, which is basically the confirmation we need for that idea to be solidified, and it is. Everyone is switching into this idea of getting exposure to both sides of the equity market and using dividends as that constant return that you would usually have in the bond market and as the hedge. So if you're wondering why the Dow is like exploding here, this is why. There's this actual inflow from all portfolios around the world in terms of big pensions and everything else, these big mutual funds that are switching their strategy. That's literally what's happening. And so we're seeing it live. And again, if you want some perspective I talked about this morning, and yeah, it's really fucking nice to make a lot of money from everyone else agreeing with your own idea, right? We were trading it for our own idea, and now we're getting this real ramp here. Now, what's important here is, again, this is where we see price right now. C Trader typed in like best day to buy was dot 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 exactly. Best day to buy was a year ago, but um, this is where price is today, right? We need to be looking further. If there's this much of a push today, do you think that people are buying right now because they think it's going to go down or sideways? No, that wouldn't make much sense. Do you, if you have a fund, let's say with $10 billion, do you buy all $10 billion of dollars in one day? Do you go put it all $10 billion in one day? No, it's going to take a long time. If orders have just started, again, from this consolidation here, being put on in terms of what we call periodic orders, these orders that you go call up a prime broker, tell them you want to buy a certain amount over, we'll just say, fill me on $10 billion worth of this idea, it's going to take time. Every single day that order goes through, that's how the value side works. It takes days and weeks to build up a portfolio. And when we talk about the whole, basically, market wants to do this change, obviously, like, again, I think it is obvious here. And like, even when I look at Twitter here, Michael Batnick, who I've talked about before, he posted this meme I just retweeted of, it's like all the silly growth tickers that we've been thinking about in a tornado, and then everyone else is sitting on, it's like you're sitting in your lawn completely fine without the tornado. That's the Dow Jones, right? We're basically in this area where everyone sees it and everyone realizes it, and so everyone's going to trade this way. It's important to, again, it's probably annoying that I say it every day, but you need to be trading through what's working first, which again is this sort of value side. And now what you need to do is add in this factor that there's this dividend idea that basically you want to be putting money towards this dividend exposure and what may actually get a higher dividend or what may introduce its first dividend ever. And sort of when we look at these areas and spaces, it starts to make sense when you start to think about it a little bit more. I talked about this T idea, right? Why do we keep seeing on this communication side this very strange move of this constant inflow? And it's not a good chart. The AT&T never moves. It's this idea that there's actually something there because, one, there's the dividend, which is a constant return. But if the stock doesn't go up, then it's kind of worthless, which I've always talked about for a long time. But guess what's going to happen instead? You're going to get inflation, and that chart's going to go up and appreciate no matter what. And so it's the direct opposite of what we see in the bond market right now, which is a constant return, but it's negative rates or negative yields because there's going to be inflation in the future. Equity market's going to appreciate with inflation here. And so even if something's trading flat now, we know it's technically going to appreciate, and there's no downside because, again, the Fed is supporting, the federal government is providing fiscal stimulus, fiscal spending, everything else. These things work together to cause this uptrend and constant inflow, and it's being produced here. And then the other side that's really important with this is not just dividends. This is where some of the euphoria came for me this morning, was that I've been talking about this buyback idea for a while, right? Many of you know that buybacks are basically just dividends. Buybacks are dividends. When a company buys back, it's a dividend because they're quite literally raising the price. And if you're in a position, then you were just given profit. You were literally just given by profit by the company. When Google buys 50 billion of its own stock, they're paying you a dividend because the price is going to increase, right? There's no guarantee that the price continues to trend up from there. But if you take profit in that moment, then you're going to be given basically a dividend. What's happening right now? All the big boys, all the big blue chips, everyone that has money are doing buybacks. And whenever there's a pullback, they're doing buybacks. They're supporting their own stock price. If you look at where money is inflowing in the equity market, it's places that I just talked about with this dividend idea, and it's places where there are companies and tickers that are going to be doing buybacks and have done buybacks. That's where money is flowing right now. And that's the place that, again, Instead of a 60/40 portfolio that has had a tough time because of COVID and has a tough time because of the way QE works, and it's even been since 2008, people have talked about how do we switch from this idea. This is the way you do it. This is literally the way you do it in this new sort of economic model that we have of this constant spending, federal support, and everything else with inflation coming, is to trade through this idea. And we see it here really showing itself today. I mean, it's disgusting to see it. And so what's important here to note is been talking about all of these different ideas every single day, and now we really have an answer in terms of piecing it all together to really see what's happening. And it's, again, it's here. This is the sort of the start of it, and it's poking its head out here. This is a consolidation leading into another breakout. A lot of points here, guys. Right? There's a lot of points here. I think you're going to start to see. You're going to really start to see it here, and it's going to get a lot of consistency here. Think about it. We just talked about this turning into a long-term idea. We look at where we're like a month past that now, right? And we're still doing it. It's I think we're in for quite the ride here, because if I'm again, it's not if I'm like right or wrong here, we're just seeing it. That's what we literally see. But if I'm right in terms of how much, I'm talking money coming out of the bond market. We're talking a $20 trillion treasury market, US treasury market. If this is a worldwide sort of thing that we're starting to see, which has been talked about, then we're talking about trillions of dollars coming into the equity market, while the Fed spends $120 billion a month. There's trillions of dollars being spent in terms of fiscal, and inflation is causing appreciation anyway. And there's buybacks, dividends, all this shit, and then the inflow from all the cash coming into the equity market. It leads to quite a fucking rally, doesn't it? This is where, when I've said it's going to be different this time, this is what it would be like if it's different this time, is that there's no pullback. You get this consolidation, we get a breakout, we just keep going. That's what would be different, and that's what we're getting. That's literally what we're getting. So if you've been trading through this idea, you're getting paid. Like you're getting significantly paid here. And you need to obviously continue to push here and be aggressive, and we're going to. Every time there's a pullback, we're buying. We're using a bias. We are buying. That's it. There's no moment when we're not buying. We're still using this value-centric idea. And then this idea I've had of buying mega caps, if you think about it now in terms of how funds right now want to be buying, they don't want to buy some random growth ticker as much as buying these mega caps and other large cap tickers that have enough cash to do buybacks, because of, again, this dividend or buyback idea of consistent returns. And by, again, you want your portfolio to be set up more heavily towards value, and then the exposure you get on growth, you want these to be basically hedged with each other in sort of just in case scenarios where if inflation changes or interest rates change, you can again get exposure to the other side, which will continue to give you a return. And that's what we're looking for. Just like COVID happening, growth tickers did well, right? It's the same idea of how these two flip-flop, but they both can rise together is a big difference, right? They both can rise together. And they don't so much fall together because one, yes, the equity market can come down together, but we have, again, support in a lot of different ways. And I think that's where things are different here. This is, I prompted it this morning. If COVID happened again right now, if we had a different pandemic, would the equity market fall another over 30% again this time? It's probably not even going to fall more than 10% if that happened, because we already know how to deal with it. So, and again, it could be a different reason, but the Fed is already set up to buy any dips that happen in terms of literally equity market or bond market. And the federal government is ready to go fucking put money into your bank account, company or individual. So again, we sort of are set up in a situation where the downside is protected through just about everything. And you're seeing how portfolios are actually changing. Before, you had to buy bonds because you never fucking knew it was going to happen. Now, again, it's been quite some time, and it seems like we're really getting there because, again, this shit doesn't happen unless there's more money coming in, right? There's more money coming here. There's been no volatility on this at all. It's just constant. It's consistent, right? I was really looking. I've been trading through the UDAO, right? This is a leverage ticker, and it barely has fucking moved to the downside, right? And that's where we keep buying, and I'm going, what are we doing here? It's because there's a significant difference happening here compared to before. And that's again that there's just a shit ton of money coming in, inflow. There's a lot of downside out there, but you can see how people are shedding that that volatility. And this is where that shorting of volatility comes in by buying these consistent sort of tickers in consistent sectors. That's where you can go look and you can find a lot of downside in the market. You can find all kinds of downsides. You can find Etsy getting fucking destroyed, nets down, right? You can look at TWLO, all these ideas, right? Your Ubers, all of these things, DraftKings, all this shit, right? Why is all this stuff come down? Why is it gone down? Because when you look at this framework, this doesn't fit into the other growth side because they don't do buybacks. They're not large companies. They don't fit within this portfolio. They don't fit. Because if you're buying value tickers and then you're looking for growth tickers, this does not actually directly hedge with your value. And it's based on it's based on the opposite of the idea that why mega caps are going to grow and why they're good hedges to the value tickers. These do not provide constant returns. They're sort of like one-hit wonders, right? And so you're seeing in the one answer to that is volatility. These are volatile, right? Mega caps are not volatile. They're too large, right? They're too large to be volatile. It's like banks that are too big to fail. Yeah, banks could lose a shit ton of money, but they're not going to go anywhere. They'll get fucking federal funding. Same with how mega caps and everything else will work. Large caps, they can seem volatile in terms of the price action, but in a week it'll come right back to where it was because of all these other ideas we're talking about, right? And so you're shedding all your volatility and going to constant sort of returns. And again, it's very fucking clear. Like it's very clear when you look at the charts now. And so we are just trading through all of this. We're trading through just the value side. And then if we're trading growth, it's going to be with the companies that fucking matter and that can make a difference in terms of their sizing and buying back and acquiring other companies. We're going to shy away from trying to capture any of these ideas like this is at a low here. Nope, not touching it because we know why it's not being touched. It's not going to fit in unless it's in an ETF with an ETF that has exposure in what we're talking about with this idea. Only in that case, in that scenario, would I be looking for that because I think we've really got it right in terms of what's happening here. And you're going to get this. You're going to have tickers that are getting beat up and are going to sort of change a little bit, I think. And that's it. That's it. Our portfolio is going to be set up like how other people are. Again, our portfolio has already been set up in the way that others are now looking to set up their portfolio. That's how these big funds are looking to do it. They want to remove 60-40, and maybe you can translate that to 60-40 equities. 60% value, 40% growth. But that growth is very specific. It's very specific, and the companies themselves are showing it. When I said, why is Google buying 50 billion at all-time high? And I said, listen to the companies themselves because they'll tell you how things are going to be. Them buying back is just further proof of again why you'd want to be buying that side because it's a fucking dividend to you. But you get the growth exposure. You get the exposure of a tech company with a consistent return of buybacks. Why has BRKB been fucking just phenomenal? And why does it look like a goddamn straight line until today after I fucking said it this morning? This is a good example of they've been doing buybacks and it's just been a consistent value trade. And it just got added to a bunch of fucking portfolios today, right? At the all-time high, right? And that's where, again, I found it very funny that it's not that I realized it at the same time as everyone else realizes it. That's why you get moves like this and the Dow going up 1% today, right? And you see other things that are down and everyone basically realized it today. Everyone did. And I would say it's going to continue to really show itself. If in a month from now, again, we continue the trend, then we'll have real confirmation of it. But for now, this is, it's different. It's definitely different. I mean, I don't know how you all feel, but it feels like months and months of sort of grinding and trying to think about ideas and sort of putting all the pieces together. Like we finally got the puzzle finished and now we see it and now we can just sort of bask in it and ride with it, right? We're going to basically trend with this market and I think we know which way we're going, right? Like this is, yeah, I think we're experiencing a very large shift, right? And it's always fun when you're sort of you're seeing it and you have all these ideas and then it comes together and then you're finding out, you find out different bits and pieces of it earlier and then we finally get the rest of the pieces just as everyone else is and we all think about it at the same time. Like you're really getting the whole market seeing this, and it's going to, again, we'll see how far we go here, but I think what you at least have here today, and again, it's not that one day matters, but I think today is sort of the apex of this idea. We will see how in a month from now and in a year from now how this has changed, and we can look at the data to see. But I'm pretty sure that since this move over here, when we first started getting very this value idea, but beyond the value idea, how we sort of position through then the Dow and looking at these, this is definitely the start of how portfolios started to change. And then I would say here it really got going. We'll be able to see again later on just how correct this idea is and how far this goes into the future. Because again, we're pricing this inflation idea very strongly. And the big idea here is that the Federal Reserve is not going away in terms of its QE, and QE is never going to stop, and fiscal spending is never going to stop. If people are changing their portfolio like this, then that's basically the conclusion, is that the U.S. government is never going to stop fucking spending trillions of dollars a year. They're going to print money and keep going. It's not going to stop, right? And so that's basically the bet here. And who's going to own the bond market, the treasury market? Who's going to own the U.S. government's debt? The Federal Reserve. The Federal Reserve will own the U.S. government's debt and print more money to pay for it, right? And it'll just be a never-ending cycle. That's where we're at. That's literally where we're at. So we've gone full circle. And again, this, just to put the last part of this together, is that it's a feedback loop. That the whole way that works is that the more we buy into this idea, the more economic spending there's going to be by consumers because they're making more money on their 401ks and everything else. And the more that starts to go, again, it influences how government spending works and how interest rates work. And if interest rates go up, you're causing the cycle to basically enter this sort of, it's not like a paradox as much as every single time there would be a recessionary sort of problem, that actually is what leads to more spending, right? Sort of if we look at COVID without the crash in any market or economy, you're removing that part. What happens if you remove the crashes in any market? It looks like things are fucking up thousands of percent. If you remove the financial crisis, it's pretty disgusting to see how different that is, right? If you just look at 1 year, if you remove the largest loss of a year, then it may go from 10% to 40% on the year. These things actually really matter, right? And so that's what this bet is signifying. That's literally the difference, because it takes a really long fucking time, right? It takes a really long time to reposition all that money. This is the time, right? We're seeing all the bond market has sold for months and months. We're talking about we're literally talking about since the November election and then the Georgia runoff. So whether this is a short-term cycle or a long-term cycle, equities are in the thing to stay. So, good job, guys. Good job. Individual company-wise, in terms of sectors, again, we're literally just talking about the same thing. So retail stores continue to do well. Consumer spending did very well. Again, when we're talking about this, we still want to go through individual companies, but you can see how still going through a broad-based idea, you're going to be able to hit the targets. It's not really like that. So when you look at moves like this is again, you're going to gain more because you're taking more risk by buying individual companies, but technically they're all going to increase on the average. So this is where we're talking about things will trade sideways or pull back, but we're still going to buy those anyway. So it may sort of create a new layer in terms of when we look at charts and how maybe they gain. The timing is a little different because a lot of this is again on a macro side and how you create a portfolio. But that's how we're looking at things anyway. So we may actually have an edge on some of these things. It's the example I made this morning was I bought K yesterday on support here because consumer spending in this side of sort of food and beverage and stuff that should have already moved with economic numbers, just like retail stores should have moved. It took 3 days, and then Monday it gapped up. Well, this other side should have already been moving. Why is it waiting for earnings, right? And so this is the same thing where now the earnings come out, and now it confirms it, so then everyone buys it. And we see this across the board on a lot of different tickers. This is again, it's why? Because if you're going to put something in your portfolio, you want confirmation that that's actually the fucking case. And so we're getting this all over the place. Like it's literally all over the place that we see this either earnings come out and then you sell and then you buy for whatever reason. And then if that's true, then as soon as the earnings come out on something else, it goes bid from it. So we're getting again the T-miss move here is another example. T earnings came, it sold, and then went bid. T-miss earnings did the thing, but it's the exact same move, just immediately, instantly. And so we're already sort of going off of a precedence on everything else. And again, these moves are, when I talk about it, I wonder if something's happening here. Like, look at these fucking charts. There's some silly moves all across the board, right? It's pretty evident, right? It's pretty evident that this sector got priced into portfolios real quick. I think the move from this morning that I talked about was also REITs. When you start to put it together, it's like, I wonder where the money from all the volatile tickers are going to go. Like, well, what's the most defensive and least volatile? Oh, REITs are. And then you see a bunch of money go into fucking REITs in the morning, right? Like these kind of ideas, like when you see them start to actually happen, it's just I find it fucking hilarious. Anything that has the word consumer in it on a sector got bid today. Go look. Anything that has the word consumer in it for a sector went bid. REITs went bid. You go look. Anything that's got, I guess, CO in the name, it went bid, right? And that's where we're at. That's literally where we're at because again, that's what's happening, and it will feed back into itself. Like it quite literally will. And so we're right here. We're on the spot. There's nothing. There's nothing else. We just put the money in the market and sit here. I guess. I mean, we'll see what new problems come out. That's kind of the problem here is that we kind of have the problem solved. How exactly do we go from here? And this is again the transition question. I transitioned energy yesterday. It's not exactly clear when, so you just have to take the decision to fucking transition. And that's the hardest part is that in something, let's say here's like a prompt. If the market just trends up infinitely, how do you trade it? Do you just long-term invest? You buy shares and just sit in it for 20 years? How do you trade options on it? Do you buy 3-month options and then after 1 month sitting in those, you take profit on those and buy new 3-month options and then after 1 month you take profit? What is the best way to do it, right? These kind of things, like they don't really have good answers, and what you're trying to do is minimize anytime there's a pullback or loss of time, right? And so that's how you can actually actively trade this, is that if you have a straight line, you're basically like, let's say this just continues forever here. You're trying to not be in when this is pulling back like this here or there's higher volatility. And so every time that starts to happen, you start to take profit transition and try to buy on this. It's the same thing we've been doing, is it not? That's the technical trading we're doing. Except the difference here is that you know you're always going to buy and that you need to start buying earlier because everyone's doing the same thing now. It's it's the answer to why is it that every time we track a breakout, everyone's already buying it again? Because that's what the whole fucking market's doing. We're not trading on anything else. We're trading on literally the same idea. Every single pension, everything, mutual fund, hedge fund, everyone's doing the same thing. And there's no more trying to position around bonds. We don't need to. The Fed owns the bond market. It's like MBSs. No one trades MBSs because the Fed fucking owns the whole MBS market. They quite literally have bought every single MBS that there is in the fucking world. So what do? Oh, throw it in equities. They're taking all the volatility when you get to go straight up here. So I think today is a really eye-opening day, and I'm really excited to see what happens tomorrow and going from here because, again, hit this one on the head. And again, those of you that maybe are not positioned and maybe have changed your mind, there's nothing wrong with buying up here. There's not. You can buy on a trend. There's nothing wrong with taking a long position from here because you don't even need to look at any of this. You really don't. It doesn't matter, right? We're talking about a constant trend, okay? There's nothing wrong with buying up here. I would go sell any junk you have. You should have done it fucking a month ago. But if you have junk and you're trying to trade dumb shit, get rid of that. It's just trash. Go trade, again, the consistent areas because there's a lot of money coming still. There's a lot of money out there that's in junk, and there's just cash. Go put it in some of this other stuff that's going to do well, and you can very easily just go buy the fucking Dow. The Dow is quite literally the idea bundled up. That's it. So hopefully, those of you that maybe have been having a hard time will now have an easy time if you just trade through this idea, and I think you will. May not be as fun, but it's fun making money. So, yeah, that's it, boys. That's it. I'm excited for tomorrow and for the rest of the year. Think we got it. Think we're right. Been a lot of hard work. Oh no, the pharmaceutical thing is going to be really fun too, obviously. Been talking about that. We still need to see how that develops. That'll be an interesting argument to still have is IP rights and seeing how that's going to develop. Again, I haven't touched anything after I sold yesterday Moderna. We'll see how that goes. Obviously, just make more fucking vaccines. I think I read something today. I think Moderna CEO said that by allowing others to use our patents to make more vaccines, there'll actually be less vaccines because if we're not the only ones making them, of course there'll be less vaccines. And I went, yep, capitalism. Right. So if we allow another factory in India to make the Moderna vaccine for their citizens, we'll somehow have less vaccines in the world that we won't be able to export to India because they'll be importing their own vaccine. It really makes you think sometimes how some of this shit works. Like, it's just insane to me. Like, it's quite literally insane for some of these fucking people to be like, you know what? If we aren't the only ones making it, then there's going to be less. Okay? Obviously. It doesn't. Where Moderna, all the money that they got was from the government. That's it. All their profit and revenue is from the government. What do you mean? What you guys didn't? What do you mean? What do you guys profited? You got a 10,000% return. You got paid by the fucking government. They're the ones that control you. They literally own your whole fucking shit. What are you talking about? I don't care if it was your dudes that figured out how to make it. You only got the money because of them. Chill. You already made all the vaccines. There's not even any more to make for. Like, that's why it's like, you guys are going to still make the same amount. It's just we're going to let someone else make more. Well, no. If they keep dying, we'll be able to make more for longer. But anyways, guys, hopefully I didn't ramble too much on the idea. I know I talked about it a lot this morning. If you have questions about sort of what I'm talking about here, then definitely ask, because again, this is it's always one thing to have an understanding of an idea, It's another thing of how to implement it and trade on it. Again, just trade through the fucking Dow if it's too complicated to be on there. So I'll see you guys in the morning. Enjoy your night, your evening, afternoon, wherever you are. And until then.